Please confirm. Can you guys hear me now? Can you guys hear me now? How is it now? Can you hear me now? Can you guys hear me now? Please, I need to be sure you guys can hear me before I start the class. Can you guys hear me now? Please confirm. Can you guys hear me now? Can you guys hear me now? How is it now? Can you hear me now? All right. Can you guys hear me now? Please, I need to be sure you guys can hear me before I start the class. Can you guys hear me now? Please confirm. Can you guys hear me now? Can you guys hear me now? How is it now? All right. You guys can hear me now. Okay. Evening. I welcome you all to tonight's live stream, weekly market review and market session. So you know how we do it. If there's any pair you want us to analyze, please drop it in the comment section. If there's any pair you want us to analyze, please drop it in the comment section. Any pair you want us to analyze, if you have any question, also drop it in the comment section. You guys can hear me now, okay? Evening. I welcome you all to tonight's live stream, weekly market. All right. You guys hear me now, please. If there's any pair you want us to analyze, please drop it in the comment section. Any pair you want us to analyze, if you have any questions, all right, guys, let's start the class. Evening, you're welcome. Sure you had a great weekend. I believe you can hear me loud and clear. Like I said, if there's anything you want us to look at together, please drop it in the comment section. If you have any question, also drop it in the comment section. Okay, so first I want us to look at the fundamentals. Okay, as a trader, you need to be aware of the fundamentals that will be released this coming week. Okay, so let's look at the calendar from 9th to 15th of February. So our focus, as you know, would always be on the major currency pairs. Okay, sorry, the major news. Our focus is on the major news. Okay, our focus is on major news. The news with red folders. That's our focus. Okay, so on Tuesday, Monday, there is no major news for the dollar. On Tuesday, we have GBP, Bank of England, Governor Belly speaks, okay, by 1:15 p.m. So you expect GBP pairs to be very volatile on Tuesday, and also USD, Fed Chair Powell testifies by 4 p.m. So expect volatility on GBP pairs and USD pairs on Tuesday. Expect volatility on GBP pairs and dollar pairs on Tuesday. Okay. How is it now, Ebuka? Is this still repeating what I'm saying? Is this still repeating what I'm saying? Is it okay now? I think the sound is okay. I appreciate you all for joining, Mr. Joseph, Mr. Ebuka, Mr. Daniel. Okay, if you are participating in this class, please drop a comment so that I can acknowledge your participation, your presence in tonight's class. All right, okay, so let's move on. So on Wednesday, we have several major news. CPI will be released on Wednesday by 2:30 p.m. CPI means Consumer Price Index. Okay, Consumer Price Index is a major news, is a major catalyst. Okay, so the focus, most of the institutions, their focus is on CPI. CPI this week, their focus is on CPI. Okay, so CPI will be released on Wednesday by 2:30. You have core CPI, CPI, and also CPI yearly, monthly. Then Fed Chair Powell testifies. So Wednesday would be very volatile for USD pairs. Okay. Then on Thursday also, inflation expectations for New Zealand dollar will be released. GBP GDP will be released 8 a.m. on Thursday. And on Thursday also, Swiss franc CPI will be released. Then that same Thursday, we have core PPI, that is price production index, production price index, that's PPI, will be released on Thursday for the dollar. And on Friday, we have core retail sales, So with what we have here, we should expect high volatility on USD pairs this coming week. We should expect high volatility for USD pairs this coming week. And volatility offers traders great opportunity to make money. When there's volatility in the market, there is great opportunity to make money, but it also comes with high risk. It also comes with high risk. And as traders, you must understand that risk is unavoidable, is inevitable in this market. Most people wouldn't want to trade this week because of the several major news that will be released. Most people wouldn't want to trade. But the truth is that when the market is volatile, that is when you'll be able to make some good profits in the markets. So all you need to do this week is to manage risk. That is what you should always do as a trader. Manage risk. Okay. If you are afraid of trading the news, if you are scared of trading the news, what you should do is minimize your risk. Trade less this week. Okay. And if you are not a fundamental trader, if you are not good at trading the news, then you should focus on trading on Wednesday, Thursday. That is what I would suggest. Wednesday and Thursday. If you're a technical trader, look for your setups on Wednesday and Thursday. Look for your setup on Wednesday and Thursday. This will be very volatile. Okay. As a trader, you can't avoid risk. If you want to trade Forex, you want to make money in the markets, you must be willing to take risk. Calculated risk. Okay. Calculated risk. Like I've always told you guys, you are a risk manager. You are a risk manager as a Forex trader. You should be very good at managing risk. Okay, so that's my take on the fundamentals. Okay, we should expect high volatility this week. High volatility. Okay, so let's go to the charts. Any question? Any pair you want us to analyze, please drop it in the comment section. If there's any pair you want us to analyze, please drop it in the comment section. Okay, let's start with GU. So, Mr. Joseph, what is your bias on GU? I want to believe you've done your homework before coming for this class. So I want you guys to comment. I want to know what is your bias. I want to believe you all have done your homework. What is your bias for GU? What is your bias for GU? Mr. Joseph, what is your bias? Are you bullish on GU or bearish on GU? I want you all to comment. What is your bias on GU? I would like to know, what is your bias on GU? Are you bullish on GU or bearish on GU? I want you all to comment. What is your bias on GU? Bearish, okay. Mr. Joseph said bearish. Ebuka, Daniel, what is your bias on GU? I'm waiting for you guys. Okay, so let's start with GU. Let's start with the weekly. The weekly time frame would define the trend. We'll be using the weekly time frame to define the trend for the week. Okay. I've only seen Mr. Joseph's response. Others, I'm waiting for your response. Bearish, okay. Ayade, Mr. Jeremiah. Bearish, okay, that's cool. Okay, so let's see. Let's start with the weekly. I believe you all can see my screen. Okay, so this is last week candle. You can see how last week candle closed. You can see how last week candle closed. Now, here on the weekly time frame, we had an engulfing pattern on the weekly time frame, and after the formation of that engulfing pattern on the weekly time frame, as you all know, this is a bullish reversal pattern on the weekly time frame. This is a bullish reversal pattern on the weekly time frame. Now, after the formation of this engulfing pattern on the weekly time frame, if we go down to 4-hour or daily time frame, I'm sure a fair value gap was created after the formation of this engulfing pattern. So let's go down to the daily time frame. On the daily time frame, no engulfing pattern on the daily time frame. Let's go down to, sorry, no fair value gap. Let's go down to 4-hour. So on 4-hour, I believe there was a little fair value gap here. I think we had a tiny fair value gap here. You can see we had a tiny fair value gap here. We also had a fair value gap here, a tiny one. Can you see that? So what happened last week? Price pulled back, filled the fair value gap, and from that point, there was a strong rejection from that fair value gap. Though we still have a fair value gap below here that is yet to be filled. The question now is, would price come to fill this fair value gap? Would price come to fill this fair value gap? What is the probability that price will come and fill this fair value gap? Also on the 4-hour time frame, I want you to see this on the 4-hour time frame. You would also see on the 4-hour time frame, the pattern we have here is a bearish reversal pattern. And what happened last week? Price pulled back. You can see a fair value gap was created at this point on the 4-hour time frame. Can you see that? A fair value gap was created on the 4-hour time frame. And what happened last week? Price also came back, filled that fair value gap, and there was a strong rejection from that fair value gap. Can you see that? So on 4-hour, we had a fair value gap that was filled on the sell side, and also buy side fair value gap got filled. You can see that. You can see that. Now let's go back to daily time frame. Let's see how last Friday candle closed. Okay, so on the daily time frame, What pattern do we have here on a daily time frame? We had what looked like a shooting star here. Can you see this? This is a shooting star, a bullish shooting star. And after the formation of a bullish shooting star, you have to wait for the next candle to close bearish. Now, based on what we have on a daily time frame, this is a bearish pattern. Do you all agree with me? This is a bearish pattern on the daily time frame. This is a bearish pattern on the daily time frame. You can see what played out here on the daily time frame. Price pulled back, filled, tested this resistance zone. That's what played out on the daily time frame. Price tested this resistance zone, and after it tested that resistance zone, you can see the candlestick pattern that formed. This is a bearish reversal pattern. Now, based on this would have been the best entry. The close of this shooting star, would have been the best entry on GBPUSD sell. The close of this bullish shooting star would have been the best entry, because after the close of this shooting star on daily time frame, if you go down to 4-hour time frame, you would have been able to identify a bearish reversal pattern on the daily time frame. Most would want to wait for this daily candle to close before they sell. If you had waited for this daily candle to close before you sell, your execution will be late. That will be late entry and your risk will be high. So after the formation of this shooting star on a daily time frame, what you would have done here is to go down to 4-hour to identify a bearish reversal pattern. So let's go down to 4-hour. I'm sure you will be able to identify a bearish reversal pattern. So you can see on 4-hour time frame, we had a bearish reversal pattern on 4-hour time frame. You can see this is a shooting star, this is a shooting star, this is a spanning top. You can see. So you would have entered sell after the formation. Now, before you enter sell, you would have also gone down to maybe 1 hour, 15 minutes, or 5 minutes to ensure that there is a shift in market structure on the lower time frame, either 5 minutes, 15 minutes, or 1 hour time frame. You would ensure that there is a shift in market structure. I believe you all know how to identify shift in market structure, right? You all know how to identify shift in market structure. So let's go down to 15 minutes. Ensure there is a shift in market structure on the lower time frame. So let's go down to 15 minutes time frame. Thank you, Thelma. Thank you, Thelma, for joining the class. I really appreciate your participation. Thank you. Let's go down to 15 minutes. If you don't know how to identify shifts in market structure, then you need to enroll for mentorship, okay? You need to enroll for mentorship. So on, let me go back to 4-hour, okay? Then let's go down to 15 minutes. Okay, so this is it on 15 minutes. The shift in market structure on 15 minutes would have occurred here. So I would like to go down to 5 minutes. Okay, 5 minutes. Let's go down to 5 minutes. Okay, shift in market structure on 15 minutes, on 5 minutes would have occurred here. Then I need to go down to 1 minute. Okay. As a trader, you know it's important that you catch the trend at its early phase. And that is why I'm going down to 1 minute time frame. It takes experience to be able to use 1 minute time frame for analysis. If you are not experienced, I would advise you stick to 5 minutes time frame. Okay, if you are not experienced, it takes one with experience to be able to work with 1 minute time frame. So you can just stick with 5 minutes. Don't go below 5 minutes if you are not experienced. Okay, stick to 5 minutes and 15 minutes time frame when it comes to identifying shifting market structure. Okay, so the shift in market structure on the shift in market structure on 1 minute would have occurred here. This is where shifting market structure would have occurred. Okay, this is where shifting market structure would have occurred on 1 minute time frame. So what you need to do is wait for 1 hour. I always advise that you wait for 1 hour candle to close below that level before you execute the sell trade. So let's go back to 1 hour. We want to ensure that 1 hour closes below that level before we sell. So at what point did the 1 hour candle close below that level? You can see this is the first 1 hour candle. You can see this. This is the first 1 hour candle that closed below the shifting market structure. Can you see that? This 1 hour candle tested that level. It didn't close below it. This also tested it. This also tested it. This also tested it. This candle did not close below it. You must ensure that the body of the candle is below that level, not the wick. Not the wick. The body of the candle, not the wick, must be below that level before you sell. So this would have been the best entry. This would have been the best entry for GBPUSD. So this would have been the best entry. So if you had sold from this point, you would have set your stop loss at this level. So you would have risked 42 pips, let's say 45 pips. Okay, 45 pips. Remember, I always advise you set your stop loss few pips above the high, the most recent swing high. If you are selling, your stop loss should be few pips above the most recent swing high. And if you are buying, your stop loss should be a few pips below the most recent swing low. Okay, if you don't know how to identify swing low and swing high, you need mentorship. Okay, you need mentorship. Okay, so the stop loss would have been at this level. You would have risked 42 pips, and let's say you risk 42 pips or 45 pips, you can go for 90 pips, 90 pips, or you go for 65 pips, 65 to 90 pips. So let's see. You can see at this point you would have made so much profits. You should be out of the trade. You can see on GU. You can see that. So this would have been the best entry for GU. So what happened on Friday after NFP? After NFP data was released, what happened? Price pulled back. Can you see that? Price pulled back, gave those traders who missed this first opportunity another opportunity to sell. So if you had missed this first opportunity, you had another opportunity after this retracement. So you can see what played out after NFP data got released. You can see what played out. Price pulled back. You can see it filled this fair value gap. Can you see it? It pulled back to fill this fair value gap. Can you see this fair value gap? That is the gap in between the low of this candle and the high of this candle. Price had to pull back to fill that fair value gap before going bearish. For those of you on the group, those of you in the VIP group, I gave you guys this signal. Most of you took advantage of it and you made some good profits. And I know some of you are still holding this trade. Okay, I made close to 50, 60 pips on GBPUSD after NFP data got released. I took a trade and I made close to 50 pips and I closed my trade before the close of the market on Friday. Okay, so based on what we have on a daily time frame, based on the pattern that I am seeing on the daily time frame, I think GBPUSD would be bearish this week. That's my take on GU. I think GU would be bearish this week. That is my take on GU. Okay, so at what point should you consider selling? At what point or at what price should you consider selling? It's one thing to know the trend of the market. It's another thing to know the right time to execute the trade. Many traders know the trend of the market, but they don't know how to identify the right time and price. Time and price. Most traders don't know how to identify the right time and price, but they can analyze the market. They can define the trend. It's very easy. Okay, it's very easy to do that. But knowing the right time and the right price to execute the trade is very key. And if you are my student, you know you are expected to buy at discount and you're expected to sell at premium, right? You are to buy at discount, sell at premium. So for us to sell GU this week, we must wait for price to pull back to a premium level, or we must wait for price to pull back to fill the buy side imbalance before we sell. If you sell at the current market price, the risk you would be taking will be very high. Okay, so I would advise that you wait for price to pull back to a premium area, or wait for price to fill buy side imbalance before you sell. That is my high advice. Okay, that is my advice. So let's go down to 4 hour or 1 hour to identify imbalance. Okay, so this is the most recent swing high and swing low. Okay, this is on 4 hour time frame. But if you go to 1 hour, I think this will be the swing high and swing low on 1 hour. This is the most recent swing high and swing low. If you had worked with this previous swing high and swing low, price had already pulled back to premium, right? Let's apply our Fibonacci to from swing high to swing low. I think price has pulled back to premium. You can see if you work with this previous range, price has already pulled back to premium. You can see what happened when price got to premium. What happened? It sold. So let's work with the most recent swing high and swing low. That will be on 1 hour. So this is the most recent swing high and this is the most recent swing low. So if you are considering selling GU this week, patiently wait for price to pull back to premium. Okay, so this is the most recent swing high and this is the most recent swing low. So patiently wait for price to pull back to premium, or wait for price to fill the buy side imbalance before you sell. Now, you would agree with me, last week, before the close of the market, a lot of traders would have executed sell after the formation of these patterns you have here. Many traders would have executed sell. Also, some traders would have executed buy, because most will see this as maybe a spinning bottom. Okay, they will see this as, okay, this is an opportunity to buy. This is a reversal pattern, a bullish reversal pattern, and they want to buy. So most would have bought after the formation of this candle. Most would have sold after the formation of these candles. And where would they have their stop losses? Their stop losses will be residing at these highs and also at these lows. There are several stop losses residing at these highs and also at these lows. These are areas of liquidity. So since your bias is sell, you want to ensure that the buy side liquidity is cleared before you sell. Can you guys see my screen? Can you guys see my screen? Please confirm. Can you guys see my screen? Can you guys see my screen? Please confirm you can see my screen. Can you all see my screen? Can you all see my screen? If you can see my screen, please confirm. Can you guys see my screen? Can you guys see my screen? Can you guys see my screen? Please drop a comment on YouTube if you can see my screen. Drop a comment on YouTube. Okay, okay. Few minutes. Okay, few minutes, guys. Few minutes, guys. Let me fix it. Few minutes, few minutes. Few minutes, please. I need to refresh the page. Few minutes. So as I was saying, you need to wait for price to pull back to a premium area before you sell. Don't just jump in. Ensure that buy side liquidity is cleared before you sell. Wait for buy side liquidity to be cleared before you sell. Okay? Few minutes, guys. Few minutes. So while we wait for this to come up, if you have any question, okay, please drop it in the comment section. If you have any question, drop it in the comment section. What are the challenges you're going through in trading? Drop it in the comment section. I believe you guys can hear me. Any challenge? What are the challenges you're encountering in trading? Let me know in the comment section. Let me know in the comment section. Oh, no, why is this not responding? Why is it not responding? Why is it not responding? If there's any pair you also want us to analyze together, please drop it in the comment section, please. Few minutes. Can you all see my screen now? Can you all see my screen now? I believe you all can see my screen now. I think I'm back. Please confirm. You all can see my screen now, right? Please confirm you can see my screen now. Please confirm you can see my screen now. Okay, so let's move on. Let's move on. So on GU, like I said, wait for price to pull back to a premium area before you sell. Identify imbalance. Let's go down to 15 minutes. Buy side imbalance. So you can see on 15 minutes time frame, we had an imbalance here. This is called a fair value gap. This is called the fair value gap, and as you can see, this gap, price has tested this gap, though it has not filled this gap entirely. You can see it didn't fill this gap entirely. Then we also had a fair value gap here that is yet to be filled. Okay, so I would suggest, but this imbalance, the imbalance we have here is at a discount area, is below equilibrium. This is a discount area. So there's a high probability they want to come and fill this gap at a premium area. So if you are considering selling, I would suggest that you wait for price to pull back to this area or this area before you sell. That is my advice. That is what I would suggest on GU. If you want to sell, wait for price to pull back to this area before you sell. If you sell from the current market price, look at the risk involved, consider the risk involved. If you sell from the current market price, your stop loss will be at this point. This is about 90 pips. Are you willing to take such risk? Are you willing to take such risk? This is about 90 pips, 90 pip risk. But if you wait for price to pull back to this area, let's assume you decide to sell from this area, your stop loss at this area, there's about 60 pips, okay, 60 pips. But if price pulls back to this area and you decide to sell, your stop loss will be as low as 40 pips. So I would prefer to see price pull back to this area before I sell GU this week. That is my take on GU. For those who are saying they are buyers on GU is buy, you could buy GU, okay? You could buy GU, but your TP should be around this area, about 50 pips. 50 pips, and if you are buying, your stop loss should be at this area, is about 30 pips. So if you're okay with that risk reward, you can still risk buying GU. You can still risk buying GU. But my bias this week is sell. So all I'm interested in is a sell setup. That's what I'm interested in this week. Okay, I hope that is clear. So let's move to the next pair. Which other pair do you want us to look at? Please let me know in the comment section. Which other pair do you want us to look at? Which other pair? Okay, let's look at GJ. Let's look at GJ. Let's look at GJ. If there's any pair you want us to analyze, please drop it in the comment section. Drop it in the comment section. So what's my take on GJ? Let's start with the weekly time frame. So as you can see, for the past 2 weeks, GJ has been bearish, strongly bearish. Okay, and I think what played out in the past 2 weeks, you can see liquidity reside at this low was cleared, and also we had a fair value gap here that got filled. So you can see this fair value gap that got filled on the weekly time frame, and also price was used to clear this what's it called, this liquidity that was residing at this low has been cleared, and also there was a breakout from this support. This support is now a resistance. This support is now a resistance. There was a strong breakout from that support. So could this mean GJ is bearish at the moment? Could this be that GJ is bearish at the moment? Or could it be that GJ will pull back after clearing the sell side liquidity and also filling this sell side imbalance? So as you can see, the last week candle closed strongly bearish. So let's go down to daily. Let's see the pattern we have on a daily. Let's see. So you can see the pattern we have on a daily time frame. So based with what we have on a daily time frame, I wouldn't suggest selling GJ. I would not suggest selling GJ because this is a bullish reversal pattern. This is a bullish reversal pattern. This looks like a spinning bottom. Looks like a spinning bottom, but we cannot jump in and start buying, right? Let's go down to 4 hour. After the close of last Friday candle, let's see the pattern we had on 4 hour. So you can see on 4 hour, we had, this is an hammer. This is an hammer, a bearish hammer. And for us to trade this setup, the next candle should close bullish. Okay, the next candle should close bullish before we consider selling. And also there has to be a shift in market structure on, let's go down to 15 minutes. There has to be a shift in market structure on 15 minutes or 5 minutes or 1 minute before you consider buying. Okay, so let's see 5 minutes. The shift in market structure on 15 minutes would occur at this point. This is where the shift in market structure will occur on 15 minutes time frame. Let's go down to 5 minutes. 5 minutes also, shift in market structure on 5 minutes would occur here. Okay, let's see 1 minute. On 1 minute time frame, the shift in market structure would occur here. So if you are considering buying GJ, there has to be a shift in market structure. Price must close above this level before you consider buying GJ. Okay. You should wait for price to close above this high. 1 hour candle should close above that high. Okay. If 1 hour candle closes above this high, you might want to consider buying GJ. Okay, that is if 1 hour candle closes above this level, you might want to consider buying GJ. But this week, I'm looking for a sell opportunity on GJ. I'm looking for a sell opportunity on GJ. And like I said, for me to sell, price needs to pull back to a premium level. Price needs to pull back to a premium level. So apply your Fibonacci from the most recent swing high to the most recent swing low. So price needs to pull back. The pattern we have on GBPJPY is similar to what we have on GU. So if you are considering buying, you could buy if price breaks out from this high, from this level. That's the most recent lower high on the 1 minute time frame. You could buy, okay, and you aim for premium, okay. If you are buying from this point, you aim, okay, it's about 100 pips. Okay, this is about 100 pips. You can see we had a fair value gap here. So they might want to fill this fair value gap. This is the area you should be considering selling GJ. Wait for price to fill this fair value gap before you sell GJ. My bias for GJ this week is a sell. My bias is what? A sell. That's my take on GJ this week. So my bias on GU is sell. My bias on GJ is sell. Okay, I think these are the two pairs I'll be trading this week. GU and GJ. My focus is on these two pairs this week. GU and GJ. I'm going to trade GJ before CPI data. I'm going to trade GJ before CPI. It is after CPI data is released, I will consider trading USD pairs. Monday, Tuesday, I would consider trading GJ. Then on Wednesday, Thursday, I would consider trading USD pairs. Okay, I'm going to wait for CPI data to be released before I would trade GJ pairs. Sorry, USD pairs. That's my plan for the week. I hope that is clear. Which other pair do you want us to analyze? Please let me know in the comment section. Which other pair do you want us to analyze? Let me know in the comment section. Which other pair do you want us to analyze? Drop it in the comment section. Let's look at gold. Okay, let's look at gold. And this could be the last instrument we'll be looking at tonight. If you don't have any question or any other pair you want us to look at. Okay, let's see gold. Gold has been bullish for months now. Gold has been bullish for months now. Past 3 months, gold has been bullish. Past 3 months, it's been bullish. Okay, Australian dollar, USD, and USD CHF. Okay, all right. So let's look at gold before we look at USD CHF and Australian dollar USD. You should know by now that Australian dollar USD is positively correlated with GBPUSD. So if your bias for Australian dollar USD for GBPUSD is bearish, you expect Australian dollar USD also to be bearish. Okay. Then you also know that USD CHF is negatively correlated with GBPUSD. So if your bias for GBPUSD is bearish, then you should expect USD CHF to be bullish. I hope that is clear. So this is a monthly time frame. Let's go down to weekly. Okay, so it is obvious on the chart, on the weekly time frame. It is obvious that gold is bullish. Even a 2 years, a 5-year-old boy will be able to identify. If you ask a 5-year-old boy, what is the trend? What is the trend of gold? Just by looking at the chart, he can tell that it is bullish, right? It is obvious that the trend is bullish, but you definitely wouldn't want to buy at the current market price, right? You wouldn't want to buy gold at the current market price. If you buy gold at the current market price, you will be taking a very high risk. This would have been a good entry on gold to buy. You can see the reversal pattern here. You can see the reversal pattern. We had a doji here. The next candle closed as a spinning bottom. You can see this is where you would have entered buy, right? And on the weekly time frame, last week candle closed strongly bullish. That tells you that the buyers are still in control, but you cannot be buying at the current market price. The risk will be too high. So what you need to do is apply your Fibonacci. Let's go down to daily. On a daily, we identify the most recent swing low. This is the most recent swing low, and this is the most recent swing high. You can see. So apply your Fibonacci tool from swing low. You can see, okay, so you can see this. Can you see that? Swing low to swing high. So if you want to buy gold, you should wait for price to pull back to a discount area, which is below level 50. Wait for price to pull back to a discount area. You can see how last Friday candle closed. This is a bearish reversal pattern on gold. You cannot buy gold now. This is a bearish reversal pattern on gold. This is the daily time frame. So after the formation of this bearish reversal pattern on gold, that was on Friday, what you need to do is go down to 4 hour. I'm sure if you go down to 4 hour, you would be able to identify a bearish reversal pattern on 4 hour. I'm sure you would be able to identify a bearish reversal pattern on 4 hours. So you can see what we have here. Can you see this? Can you see this? So this is an hanging man. Can you see that? This is an hanging man, and the next candle closed bearish. This is a bearish reversal pattern. This is a bearish reversal pattern. Liquidity residing at this previous high was cleared last Friday. Last Friday, the liquidity residing at this previous high was cleared, and you can see what we have here now is a bearish reversal pattern. So the next thing you need to identify is shifting market structure on a lower time frame. Okay, you need to ensure that there's a shifting market structure on 15 minutes or 5 minutes time frame before you go bearish. So let's go to 15 minutes. Let's start with 15 minutes. Is there shifting market structure? Shifting market structure on 15 minutes would occur at this point. Okay, this is where the shifting market structure will occur. This is where the shifting market structure would occur. You can see price tested this area. Price tested this area. What happened? There was a rejection from that area. You can see. And you can see fair value gap was created. This is sales buy side imbalance. Buy side imbalance. So we want to see price pull back to this area. Okay, you want to ensure that this fair value gap gets filled before you sell. This is where you should consider selling gold. That's my take on gold. This is the area, this is the zone you should be considering selling gold. Okay, that is my take on gold. This week, I expect gold to be bearish. I might be wrong, but based on what I'm seeing on the chart, based on the pattern I'm seeing on the chart, gold would pull back to a discount area before it continues with its bullish trend. Based on what I'm seeing on the charts, based on the pattern I'm seeing on the chart right now, gold should pull back. Gold should pull back to a discount area before going bullish. I hope that is clear. I hope that is clear. So let's look at Australian dollar USD. Australian dollar USD. So let's start with the weekly. I want to know the trend for the week. So last week candle closed strongly bullish, right? It closed strongly bullish after clearing liquidity residing at this previous low. When the market opened, there was a gap, right? Last week, there was a gap. This was where the previous week candle closed. And when the market opened, it opened far below the price it closed. That is a gap. Okay, that is what is called gap in the market. So it's opened about 60 pips below the previous week on closing price. So there was a gap there. And I think that movement was to clear liquidity reside at this previous low. So after liquidity got cleared, what happened? Let's go down to daily. So what can you see on the daily time frame? What can you see on the daily time frame? This is a bearish reversal pattern on a daily time frame. Okay, the market created a resistance. This is a bearish reversal pattern on a daily time frame, right? This is a bearish reversal pattern. We had a doji here, we had a spinning top. This is a bearish reversal pattern on the daily time frame, and I think this pullback was to fill this fair value gap here. Can you see this fair value gap that was created here? So the pullback we saw in the market last week could be to fill this fair value gap that was created here. That could be the reason for the pullback. That could be the reason for the pullback. So let's go down to 4 hour. Let's see. So you can see the fair value gap. Let's go down to, you can see this fair value gap here on 4 hour. There is a reason price closed above this fair value gap. Okay, let's go down to lower time frame. There is a reason, maybe there's likely to be a fair value gap above that one. Okay, so you can see this is the 1 hour fair value gap. This is 1 hour fair value gap, but the market still went above that 1 hour fair value gap. Let's see that. Let's see. Yeah, the market still went above that 1 hour fair value gap. Let's see 15 minutes. Let's see 15 minutes. Let's see. Okay, so this is 15 minutes. This is 15 minutes. Okay. We had okay, 15 minutes fair value gap. This is 15 minutes fair value gap. Okay, so I think that could be the reason for the pullback we saw in the market last week. That could be the reason for the pullback. Okay, price filled that fair value gap, and you can see there was a strong rejection from that zone. There was a strong rejection from that zone, and after the close of last week candle, let's go back to 4 hour. So on 4 hour, you can see we have, this is a fair value gap here. This is a fair value gap, and also on 4 hour, you can see we have a fair value gap here. So, okay. So based on the pattern on the daily time frame, based on the pattern on the daily time frame, I would expect AUD/USD to pull back and fill this gap. I would expect that AUD/USD will pull back to fill this gap. Now, if price breaks this resistance level, if a 4 hour candle closes above this resistance level, one can risk buying, but I don't want to buy $USD this week. If I'm considering buying, if I want to buy $USD, I want to see price pull back to a discount area. I cannot buy at premium. If you work with this previous range on a daily time frame, this previous range, you would agree with me that price is at premium, right? It is obvious. You can see. I don't need to apply Fibonacci. Just by looking at the chart, you can tell that price is at premium. Is at premium, and it just filled a fair value gap at a premium area. So it will not make sense for me to buy at the current market price. If I wanted to buy AUD/USD, this would have been the best entry. You can see it now. This is where we would have entered buy. This is an hammer indicating change in trend. So if you didn't buy at this point, why would you want to buy at the current market price? Does it make sense? It doesn't make sense. That will not be a good investment. That will not be a good trade, right? This is where you should have entered. Now, if you had missed this opportunity, you had another opportunity to execute buy after the formation of this pullback. After this pullback, you had another opportunity to buy. You didn't buy at this point. You missed the first opportunity. You missed the second opportunity. Why would you want to buy at this point? You didn't buy when price was cheap. Why would you want to buy when price is at a premium, when it is expensive? So if you're considering buying, you should wait for price to pull back. to this area before you buy. But based on what I'm seeing on the daily time frame and the 4-hour time frame, you should be considering selling from premium to discount. Excuse me. So that's my take for Australian dollar USD. My bias for Australian dollar USD this week is bearish. I hope that is clear. So the last pair we'll be looking at is USD CHF. USD CHF. Let's look at USD CHF before we end this class. For those of you who don't have funds in your trading account, there's an ongoing promo on Oro Markets now. There's an ongoing promo, okay, on Oro Markets platform. If you open an account with Oro Markets, you can have access to, I think it's $100, yeah, to get started. You have access to $100 bonus, trading bonus. You can start with that $100. And if you make profit, though there are terms and conditions, okay? If you make profits, you can be able to withdraw your profit if you're able to trade to a certain amount of lot size, okay? Depending on your profit. Let's say you start with $100, they give you the free $100, and let's say you make $50 profit. You're expected to trade a certain number of lots before you can be able to withdraw your profits. So once you make profits, the profit will be transferred to your live account. They will transfer the profit to your live account. You start trading on the live account, but for you to be able to withdraw the profit, you need to trade a certain number of lot size before you can withdraw it. So if you don't have funds, I would suggest that you register an account with them so that you can have access to that $100. Okay, instead of trading demo, you can trade with that $100. Okay, so that's my take on Australian dollar USD. And for those of you who would like to take advantage of the trading bonus, all you have to do is just open an account with Oro Markets, and you would have access to that $100 bonus. Okay, USD CHF, where are you? Where are you? Excuse me. So let's start with the weekly. Whew. So if you look at the structure on USD CHF weekly time frame, you would agree with me that the structure is a bullish structure. You see that clearly on daily or 4-hour time frame. You can see it's been creating series of higher high and higher low. It is obvious. You can see that, right? Australian dollar USD has been, creating series of higher high and higher low, higher high and higher low. So how did last week candle closed? Last week candle, let's start with the weekly. How did it closed? So this is what we had on the weekly. Previous week, you can see how previous week candle closed. It closed as an hammer, right? It closed as an hammer. Now, after the close of that hammer candle on USD CHF, let's go down to 4-hour. I'm sure a fair value gap was created after the formation of this hammer. A fair value gap was created on daily, 4-hour or 1-hour time frame. And this pullback we saw in the market last week could be to fill this fair value gap before going bullish. So let's confirm the fair value gap. The sell side imbalance has been filled. So let's go down to daily. I'm sure a fair value gap was created. Okay, so let's go down to 4-hour. Let's go down to 4-hour. So you can see on 4-hour, we had a fair value gap here, and that could be the reason for the pullback we saw in the market last week. Let's see. Let's confirm that. So this is the fair value gap on 4 hour. Let's see what happened when price hits this zone. What happened? Let's see. So you can see it means for price to break out from this fair value gap, it means there's still a fair value gap below. There's still a fair value gap below. That could be the reason price, broke out from this zone. So let's go down to 1 hour and 15 minutes. I'm sure it's likely there's a fair value gap below. That was why price break out from the 4 hour fair value gap. Let's see 1 hour. So 1 hour. This is the fair value gap on 1 hour. This is the fair value gap on 1 hour. What happened when price got to this zone? Let's see. Let me go back to 4 hour. Okay, it still traded below that zone. So let's just check 15 minutes. Let's just see if there's a fair value gap below. Let's see. Okay. So on 15 minutes, this is a fair value gap. This is 15 minutes fair value gap. I believe price still went below that level, probably to clear liquidity that was resided at the previous low. Let's see. Probably to clear liquidity resided at this previous low. Let's see. So let's go back to 1 hour. Let's see. So that is it. So I think the pullback was to fill that fair value gap, and that they have achieved. They have achieved that. So, and you can see after price filled the fair value gap, you can see this would have been a good entry for USD buy. This would have been a good entry. After price filled this fair value gap, you would have looked out for buy setup or wait for a shift in market structure. Can you see the shift in market structure that occurred here after price filled the fair value gap? Shift in market structure occurred after price closed, after a candle closed above this high. So this would have been the best entry for USD buy. That would have been the best entry. So let's go back to 4 hour. So my bias for USD this week is a buy. Okay, it's a buy. But before buying, let's see. Before buying USD price should pull back to fill fair value gap. Let's go to 15 minutes. Is there a fair value gap? Before buying this week, I want to see price pull back to fill. Probably there's a tiny fair value gap here, though this gap has been filled. It has been filled, so they might want to test this level. Okay, they might want to come back to test this level. These lows need to be cleared. Okay, these lows need to be cleared. This liquidity reside at this lows. A lot of people would have bought. Their stop losses will be reside at this level. So there's a high probability they will come for that lows before going bullish. Okay, so we have a fair value gap here. So you can see this is 5 minutes. So price has not entirely filled this. This gap has not been filled entirely. So there's a high probability they want to come and clear after clearing this liquidity resign at this previous low. They want to fill this fair value gap. So if I want to buy USD this week, I want to ensure that this low is cleared and also this gap is filled completely before I would go bullish on USD So my bias for USD this week is buy. So that'll be all for tonight's session. I want to believe you've got value. If at this point in time you are yet to like this stream, please do. If you're yet to like the stream, please give it a thumbs up. And if this is your first time participating in this live stream, I appreciate you for your participation. Please subscribe to the channel so that anytime I come online or anytime I drop a video, you'll get notification from YouTube. Please subscribe and also give the video a thumbs up. Any question before we end the class? Do you have any question before we end the class? I appreciate you all. Mr. Joseph, Mr. Daniel, Mr. Ebuka, Mr. Ayoade, Tema, and Mr. Elvis. I appreciate you all. Any question before I end the session? No question. No question. Okay, no question. I wish you all a profitable trading week. Please always remember to apply proper risk and money management. Please ensure you apply proper risk and money management. Before you enter the trade, define the risk on the trade. Please define the risk on the trade before you execute the trade. If you don't know the risk on the trade, don't take the trade. Don't take the trade. If you don't know the trend of the market, if you don't know the risk on the trade and the potential reward on that trade, please do not execute the trade. Okay? Don't execute the trade. Know the dollar amount you're going to lose on the trade if it goes against you before you execute it. Please don't gamble in the market, and also ensure that you are trading your plan, you are executing your plan in the market. The market will always tempt you, would always tempt you to do otherwise. The market will always tempt you to trade against your plan. You have to stick to your plan. That is the definition of discipline. You have to be disciplined. Stick to your trading plan. Don't stick to my trading plan. Okay? You don't have to stick or work with my trading plan. Work with your trading plan. Work with your trading plan. Execute the trade when you see your setup on the charts. Okay? Execute your trade. As a trader, you have to be comfortable with taking losses. You have to be comfortable with risk as a Forex trader. If you're not willing to take risk, please, trading is not for you. Okay? If you're not willing to take risk, don't trade Forex. Don't trade Forex. Don't trade Forex. You must be comfortable with taking risk in the market. That is how we make money. We lose money, we make money. We lose money, we make money. But as a trader, you just have to ensure that your profit is always at least higher than your losses. You have more winnings, more profits than losses. That is the secret to achieving consistency in the market. That's the secret. Risk management. Please. Please. All right, guys. For those in the VIP group, we'll be meeting tomorrow morning. Okay. Tomorrow morning, and probably on Wednesday, I'll be meeting with you guys to share my trade buyers with you guys. And as you know, I always drop signal on the VIP group. For those in the VIP group, I drop signals. Okay, you know when I take my trades. Okay, so for those of you who are here to join the community, you want to join us, you want to trade live with me, okay, and you want to be getting market updates, daily market updates, you should join the VIP group. It's not a must. If you're profitable as a trader, you're doing well, you don't need to join the community. Okay, the community was created for those who are struggling to be consistent in the market. Okay, you're not making profits in the market, you've been trading for years, you're not making money. Okay, you should join the community. It will be of great benefit to you. Okay, so I think the market has opened. Has it opened? Okay, the next 6 minutes, the markets will be open in the next 6 minutes. All right, guys, do have a wonderful night. If you're interested in joining the community, just send me a message on WhatsApp. I believe you all have my WhatsApp contact. Send me a message on WhatsApp if you're interested. Good night, guys. Good night.